Okay, welcome back to the Ultimate Trader webinar series number 5. This is the Gold Rush play. Now, what is the Gold Rush play? Well, first of all, this has nothing to do with trading gold. This is everything to do with the psychology of mass markets and how people react when they feel that they've missed something. Let me explain. First of all, the strategy looks for stocks which are making new highs and then have recently pulled back from those new highs. Now, generally, it's that first group of traders or investors that forces the new high. But really it's the larger group of traders who have missed that first run to the new high. And that group is generally quite an aggressive group. It's generally the crowd volume group. And it's because it's larger than the first group, after the pullback, when that group then gets involved, i.e. hearing about the move later, that's generally when a stock has been reported in the news later that it has hit highs and then it pulls back. That larger group will send the stock running to greater heights, and what we want to try and do is ride that momentum. So essentially, let's take a look at this chart here of BAE Systems, and we can certainly see this was the first high here that the stock had as it just broke over 205, 206. Then the stock pulls back. Then we see a pivotal reverse here as the second team of buyers comes in and pushes the stock all the way up to 220. The key trigger for the signal of this trade, of course, is to get in on the stock as it pivots and changes. The Gold Rush play is a particularly powerful one. If you look across any chart over any period of time where a stock has made a new high, look what happens after the stock pulls back, and that would be pulling back here and then off the pivot. And you'll generally see, if you see the pivot here is at about 190, the stock runs very clearly all the way up to 220. So a good 30-point run in a couple of weeks period of time there, just about 15 days or 15 trading days, maybe a slightly less. So 30 points there, good steady run, a good place to put the stop loss. Very unlikely that it's going to pull back and break down through the stop loss. Take a look at the top 350 shares on the London Stock Exchange or the S&P 500, and what you'll certainly see is when those stocks make those first new highs, watch what happens after they pull back and then pivot. This here is the pullback, and then notice this is the pivot here, and then watch the run. So the strategy is we look for stocks breaking out to new highs, and throughout the program we will show you how to scan for stocks which are breaking out to new highs, so you don't have to go on a crazed search to find them. Very simple scan to run that. And then we're going to look further for retracement from the highs, and we can also set a scan which will alert us as stocks which have hit a high are then pulling back. And of course we're going to go through that in detail on the Supersized Trading Income program. And then of course we're going to enter trades from the pivot off that retracement, and this pivot trading strategy we're going to go through in great detail as we teach you to do that. So that's the Gold Rush play. It's a great strategy. Have a look at a number of stocks now, and so you can get a feel for how easily this works, and we'll look forward to seeing you in future modules.